Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Matthew Friend of Accenture, and we're going to be talking about the digital age. So, how has really the march of digital channels really transformed the payments business in your region?
So in my region, in North America, it's been two primary items that have been forcing the march to the digital age. And we recently conducted a survey on consumers' take on mobile payments in the digital age. And two themes that came about from that in particular was first, contactless payments. Contactless payments really is part of mobile and the digital age, whether it's a mobile phone, a tablet, or other devices, is very much pushing the envelope and what retailers can do, what financial institutions can expect to offer, and ultimately what consumers are demanding. So contactless payments is really pushing the edge.
Is it also, do you see sort of contactless being a gateway to mobile at all?
Absolutely. It's the expectation, certainly within North America, as we are in a technology position to really leapfrog a lot of other areas, where for a long time, certainly on the card side, we'd been beholden to the mag stripe. The economics just didn't make sense to move to beyond it. So now that we have mobility, so you have the mobile device and EMV and other forcing factors that, for lack of a better term, are allowing retailers, financial institutions, and others to kill multiple birds with one stone. So they can make that investment once and really migrate quickly to contactless across the board. So our research has shown this, and just working with retailers, financial institutions, and speaking to consumers, this is what their expectations are.
What was the second part? Yeah.
So the second part was real-time payments. While this is still nascent in North America, we've taken and looked a great deal at what's happened in the UK with faster payments, what's happening with Australia and other parts of the world, and really looking what will the impact be in North America, not just what the consumer benefits and impact will be, which will be significant, but the impact of making that change upon financial institutions in particular, moving from batch systems that really work and are solid and performed well for a number of years and will continue to perform well for a number of years in the future. How can you balance and make the right choice to move to real-time payments and when? What are those economics? So those are two of the prevailing questions that really come up from our research.
Yeah, I find that really interesting, North America looking to faster payments, so that would be interesting to see here.
Well, you step back and you see what their business case was and where it's actually evolved, and then what the business case and the lessons learned will ultimately be in America. We spent time talking with the Federal Reserve and know that they're looking into it, and they've made clear statements that they want a solution to the issue. So how quickly the market responds to that is going to be certainly an interesting result. There's a couple other things that have really happened in North America. As you move to the digital age, and we've seen and worked with a number of financial institutions that have looked to expand their footprint. In the digital world, you can do so without the capital investment and buying branches and the capital infrastructure. So worked with regional institutions that want to move toward more of a national or North American scale. And they can do that quickly without that same type of investment that they had to do in the past. So there's a couple efforts underway, and it'll be very interesting to see what some of the results are. And they should be in soon. And then the final piece that we've seen in North America, as the digital channels proliferate, their ability to handle in the back office, the capital systems that are there for core payments, as we said, they've been there for a while, but they're being taxed right now, and their ability to expand and support seamless cross-channel experiences is going to be interesting, and how financial institutions are able to weave and handle and manage that customer support for a seamless cross-channel experience. It's the right goal, but the ability to get there is really going to be taxed by the real challenge of some of the core systems behind it.
There are a number of commentators in the industry that claim that the financial services world has been kind of slow to respond to the digital channels and the digital age. Would you say for your region that this is sort of a fair comment?
It probably is a fair comment. It's been a fair amount of wait and see. In particular, North America has been looking to a lot of what's been happening in Europe. There's a lot of lessons learned and technologies that are being tested and really coming to fruition through SEPA, and waiting to see what happens in Europe and then be a fast follower from the North American side. So we've seen a lot of that. And probably a bit of the Goldilocks approach. There's been some investment in some areas that are deemed critical to the financial institution, and some there's been underinvestment. So a little bit of the Goldilocks of what's just right, and that has varied by institution, as we've seen it come across. And in the end, it's been more incremental investment. It hasn't been as transformative. And a lot of that has been to keep up with a lot of the regulatory demands and a lot of the reporting demands that are out there. But ultimately, financial institutions are gearing up from what we've seen for major transformation, whether it's dealing with real-time payments, whether it's dealing with known regulatory demands, or really just the ability to serve the global footprint, which a lot of the larger financial institutions we serve are now forced to handle.
There are a lot of, customer behavior changes that have been driven by, changes in the digital environment and digital channels. What are the banks in your region doing right to address these changes?
That's a great question. The banks in our region have really begun to accept and understand the valued position that they hold with their customers across the board. And in particular to that valued position, they're looking to add value-added services across the board. So whether you're dealing with commercial and corporate transactions, if you can help with forecasting, better data analytics, they're really looking to add value-added services across the board. And the same thing to individuals, the consumers that they provide that experience to. Again, more value-added services. And a key element of that is pairing up with other non-financial institution companies to get to market more quickly. You look at some of the daily deals that are going on, where financial institutions are doing a good job of brokering their corporate relationships in banking with their individual relationships, and being the broker of bringing those deals to individuals and doing it through the corporates through which they provide this business. So they are retransforming themselves and not allowing themselves to be disintermediated. They are reaffirming that position of the broker of trust and of where to go for the best deal in financial operations. So those are the two key areas that I see overriding in North America right now.
Excellent. Thank you very much, Matthew.
Thank you.